Okay. Okay, so our learning objectives here is to discuss the real estate taxation in the Philippines, to discuss the tax rates and collection of taxes, and to explain the importance of real property tax. Okay, so what is a real property? So we all know that the real property, it talks about the land and the improvements or developments of the land, including the structures and buildings, which is affixed or attached to the land. Please take note that the real property also includes not just only the buildings and the other structures, even the structures which can be moved or removable, just like machineries and equipment. So those things are part of the real property. In a business purpose, the structures or developments in the land are the warehouses, factories, offices, and also other businesses or other buildings rather. So please take note that real property may also include, so for whatever is beneath the surface of the land, including the minerals, natural gas, and oil. And also also include also the rights to the use of property. It will depending on how the properties must be consumed or used by the people or the business. And also the leasehold improvements is also inclusions the real property, since these leasehold improvements are cannot be removed. So please take note of the following terms in order to familiarize on the real property tax. Of course, the terms are assessment. So the assessment, these are the act or process of determining the value of the property. So of course, in order to assess the value of the property, you need the fair market value. So the fair market value, this is the highest price that the property can be command to put in a sale in an open market. So the fair market value, this is the value or the appraisal value of the property that also composed of the price ceiling, which can be set the prices, the prices on a high or expensive. And of course, I forgot the assessment level. So the assessment level is the percentage applied to the market value or to the fair market value of the property in order to determine the assessed value of the property. Assessment levels is the percentage. So in order to get for the real property tax, we have to compute for the assessment value. And the assessment value is the tax base for computing the real property tax. Please take note, the fair market value and the assessment level are very important, okay, in order to identify or to determine the assessed value of the real estate. So please take note of the following assessment levels. So we have the two sets of assessment levels: the assessment levels of the land and the assessment levels of the buildings and other structures, including the assessment levels of the machineries and equipment which are removable property attached to the land. Excuse me. Of course, for the assessment of the land, please take note if the land is used for residential, that is 20%. If the land are used for commercial, industrial, and mineral, that is 50%. If the land is used for agricultural purposes, that is 40%. For timber, 20%. And for the scientific, cultural, and hospital, that is 15%. Of course, what are those assessment levels on buildings and other structures? So we have the following assessment levels on the buildings and other structures depending of its type. So first, if the buildings and other structures are residential, here are the fair market value to be the assessment level with the following brackets. If the fair market value of residential buildings and other structures are 175,000 below, that will be 0. From 175 to 300, that's 10%. From 300 to 500,000, that's 20%. From 500 to 750, it's 25%. From 750 up to 1 million, that's 30%. From 1 to 2 million, 35%. From 2 to 5 million, that's 40%. 5 to 10 million is 50%. And 10 million over or 10 million above, 60%. For the buildings and other structure assessment levels, if it is agricultural purposes, if the fair market value is 300,000 below, that's 25%. 300 to 500,000 is 30%. 500 to 750,000 is 35%. 750 to 1 million is 40%. 1 to 2 million is 45%. And 2 million above, 50%. For the buildings and other structure assessment levels on the commercial or industrial purposes or use, if the fair market value is 300,000 below, that's 30%. For 300 to 500,000, that's 35%. From 500 to 750,000, that's 40%. From 750 up to 1 million is 50%. From 1 to 2 million, that's 60%. From 2 to 5 million, that's 70%. From 5 to 10 million is 75%. And if the fair market value is 10 million above, that is 80%. And for the buildings and other structures for timberland purposes, if the fair market value is 300,000 below, that's 45%. From 300 up to 500 is 50%. From 5 to 750,000, that's 55%. From 750 up to 1 million, that is 60%. From 1 to 2 million, that is 65%. From 2 million above, that is 70%. For the machineries, is also part of the other structures, okay? So if there are some machineries inside the property, so that should be assessed. Okay, first is the agricultural. If the machineries are for agricultural purposes, that's 40%. For residential, 50%. And for commercial industrial, that is 80%. For the special classes, based on the actual use, okay, if it is for cultural, that's 15%. Scientific and hospital, that's 15%. Of course, the local water districts and even the GOCC are 10%. So those are the assessment levels of the land and other structures, because there is a separate computation on the assessment value of the land and the buildings and other structures. Then after we compute for the assessment level, we can combine both of the assessment value in order to compute for the real property tax. So how do we compute for the assessment value? So as I've said earlier, the fair market value is an assessment level is very important to determine the assessment value. So we have to multiply the fair market value and the assessment levels based on the matrix which I have discussed. Okay, let's have our example here. Okay, compute for the assessed value of a residential land whose fair market value is pegged at 2 million pesos by the municipal assessor, and the house with a fair market value of 500,000. Okay, so let us compute for assessment value of the following: the assessed value of the land and the assessed value of the house, because house is the building and other structures. So let us compute for the assessment of the land. Okay, so since the land is residential, so therefore that's 20%. So 2 million times 20%, that is 400,000. That's for the land. But for the house, which is the buildings and other structures, since this is from 3 to 500,000, it's still 20%. It is also at 20%. So at the assessment value of the house, 500,000 times 20%, because on the bracket of the residential, from 3 to 500,000, that is 20%. Okay? So the total assessment of the land and a house is 500,000. So this is the combination of the assessment value of the land and the house. the 400,000, and 100,000. So with the total of 500,000. So that is the assessment value of the house and the land. That this is the tax base for the real estate tax. So what is the basic real estate tax rates? So we have only two basic real estate tax rates, or the real property tax rates. If the land or the real estate property is located in the provinces, that is only 1%. But if the properties are located in NCR or Metro Manila, that is 2%. So to compute for the estate tax, of course, the assessed value multiplied by the tax rate, which we also the tax rate which we compute for the assessed value. Okay, so going back to the example, so let's say the land and the house is located in Cebu. So Cebu is a province, even though that's a chartered city. So therefore, the tax rate for the real property is 1%. So the assessed value of the land and the house is 500,000 multiplied by 1%. So that is 5,000. So the real property tax is 5,000. It should be filed to the local government. Please take note that the real property tax is a local tax and it should be collected and to be paid to the LGU, or the local government unit. So in order to pay for the real property tax, and this is an annual payment or annual tax, you go to the assessor's office and give your name if you are the owner of the property. Then the assessors will be the one to compute for the land and other structures of your property. This is also the correct the method of computation. For whatever the fair market value of your land and other structures, that will be computed on the assessment level, and then we compute for the tax rate. Okay, if it is 1% or 2% based on the location, and after that, excuse me, the property holder, the owner, will be the one to pay it to the Treasury Department of the local government. Okay, so that will be our topic for today when it comes to the real property tax.